Hey, what's going on everyone? Welcome to the Nomad Hedge. In today's video, we're going to go through market action yesterday and see if we can expect stocks to go lower from here. We're also going to take a look at the dollar index, the bond market, and some intermarket analysis as well. But before we get into that, subscribe to the channel if you haven't already and hit that like button. So let's begin by taking a look at the dollar index, and as we can see here, it fell below this channel here since September, and we found support here at the 200-day moving average, which also coincided with this Fibonacci retracement of 0.5. So in another video I mentioned that we could possibly see a bounce to the upside here. We have seen 3 days up for the dollar index, and we could possibly now see some resistance just below this lower low trend line. The 21-day exponential is also a potential resistance line, but the key to watch is this 50-day moving average, which is starting to slope down a little bit. But if we're going to see a potential rise for the dollar index, I think we have to look at the Fibonacci extension of 0.618, which is also coinciding with this 50-day moving average. So it is possible we could see a final leg up here before we're seeing a complete rollover of the dollar index. So the MACD is starting to approach a buy signal here with momentum to the upside, but this is just a short-term bounce in my opinion. And so if we look at the dollar index here on a weekly chart, we can see a clear support here at the Fib 0.5. Now we've been down 2 weeks prior to that. The reason why I believe this is just a temporarily short bounce to the upside is that the MACD haven't shown any signs of exhaustion to the downside. If we would see a light red here, a histogram which is light red, that's when I would potentially see this as a short-term bottom. But for now, the bias is still to the downside. And so we do have a sell signal on the weekly chart. We're seeing the trend for the buyers is starting to slow down here in the ADX. And so on the monthly chart, we can see that we've tagged this higher high trend line here. Not quite exactly, but we found almost resistance at this level. And so the bias is clearly toward the downside. Now, if we take a look at this channel here, this is a bear flag, so a potential target would obviously be the 50 retracement or the 0.618 or the golden ratio here, but obviously this is going to play out in a very long time, so we could talk about maybe a year or months. So we're overbought here on a monthly chart. We're also seeing the MACD is showing exhaustion here to the upside, and so the bias is clearly toward the downside. And so it's not uncommon to see, after so many days of rollover, to see a little bit bounce to the upside, possibly some buyers buying the dip here of the dollar index. But again, look out for this trend line here as potential resistance, or the 21-day exponential, but more importantly the 50-day moving average. Moving on to the 10-year, but the 10-year has been a little bit difficult because it's been in a very long uptrend here. But this pattern now is starting to form and build up, so it looks to me as we're building up a rising wedge here. And so we broke below this higher low trend line here back in September, and we're now starting to form a falling wedge here, which has a potential target to around 4 or 4.2%. So, but if we would rise to around 4 or 4.2, we could potentially form a double top here, and then from there we could possibly test this higher low trend line again before breaking down significantly. Now, if this one would break down, the initial target would obviously be the 50 retracement, but it could go as low as 0.618. But this would obviously play out in a very long time, so we're looking at maybe weeks ahead. So a bounce to the upside here would not be of a surprise, and then we'll just have to see if this thing's going to roll over from there. But on a weekly, we do have a confirmed sell signal here on the MACD. You can see here that the pattern is being played out here as a rising wedge. I think the outcome here would be a possible support around here, break above this falling wedge, maybe forming a double top here, and then break down from this pattern. Around 2.6 or maybe this lower high trend line here could act as support for the 10-year. But for now, if you just look at this pattern here, it is being played out. It's just that when is the question for it to start rolling over. Let's move on to the VIX, and as we can see here, this thing has just been continuing to roll over. So it is a possibility now that we could potentially see this open gap back in August getting filled. And if we look at the VIX on a weekly chart, we can see this open gap coincides with the Fibonacci flashy retracement of 0.618. So it is a possibility that we could find support here, and then we'll just have to see how the VIX is going to react at these levels, because it is starting to get heavily oversold on a daily chart, but it still has some room to the downside here on the weekly. And so this retracement is calling for a 20.78 on the VIX, and after that there is a possibility that we could see the VIX spiking again. Let's also take a look at the market indices, and we're starting out with the Dow here, which has been the best performer. And so on Monday we still held above this 5-day EMA, and we can see that volume is subsiding a lot here. So this has mainly to do with the holiday weekend and the shopping season. So we got the MACD here looking to flash a sell signal latest on Tuesday or Wednesday. So if that happens, we could see some short-term traders cashing in their positions. And so we're going to look toward potential support here, the 21-day exponential, which crossed above the 200-day now. But we do have an open gap here, so it is possible we could fill this open gap. But obviously we need to stay above the 50-day moving average for the Dow to sort of like make sure that we're still in the bullish phase in this rally. But any break below the 50-day moving average and the fib retracement here of 0.618, then we could possibly see new lows here for the Dow, even breaking below the lows that we saw back in late September. Now, I like to look at the MACD a lot. And if we look here at the MACD on a weekly chart, we're not seeing any signs of exhaustion to the upside yet. So if we would see any pullback here, it would probably minor. And just as I said, maybe the 21-day exponential. But I would like to see the Dow pulling back a little bit because it is too extended at this point. So any pullback, maybe testing the 21-day or the 200-day moving average would be a good outcome here. And then from there, possibly make sure we're breaking above this lower high and lower low channel. And then we could possibly enter a new bull phase for the Dow. Who knows? But this, as long as we're not seeing an exhaustion here on the MACD, this trend is still to the upside because we're also trading above all key moving averages. Let's also take a look at the S&P 500. This is a daily chart, and just like the Dow, but the S&P fell below the 5-day EMA here, and we're seeing that the volume is also down heavily due to the shopping season. And just like the Dow, we're almost seeing the MACD flashing a sell signal. And so if we take a look at this thing on an intraday 15-minute chart, you can see that we have a trend now to the downside. So any bullish move now short term for the S&P would mean that we need to break above this trend line here. And so it's been poking with it, and one could make an argument here that we could have a falling wedge here, and that could possibly see a breakout on Tuesday. So if we're going to hold the 5-day EMA, we need to break above this trend line, obviously. So that's just something to watch on Tuesday. Moving on to the Nasdaq, or the QQQ, and as we can see here, this thing fell over 1% on Monday, and the 50-day did cross now the 21-day exponential. So the bias towards the Nasdaq is obviously now to the downside with falling volume. Any last support here would be the 50-day moving average. If not, we could possibly look towards this open gap here, filling that thing, and if not, we would have to look at potential support lines here. So this would be a support zone for the Nasdaq. You could possibly see a triple bottom here, testing this bottom, and from here maybe rally to the upside. I'm just saying that trend now is down for the Nasdaq. We're also approaching a sell signal here on the MACD. If we take a look at the QQQ here on a weekly chart, we still have an early buy signal here. So this thing needs to hold up with rising momentum to the upside. But for now, if we gauge this thing on a daily chart, maybe that could hint that this buy signal is not going to last very long. And so any signs of exhaustion here to the upside on the weekly MACD, and if that happens, we could possibly test the lows from mid-October. And so what's interesting about the Russell 2000 here, this is the second time now that we're finding support at the 21-day exponential. So maybe that will give us a hint that the Dow and the S&P and maybe the Nasdaq could test their support at the 21-day exponential. But if we would take a look at the Russell here, this was a clear resistance at the 200-day moving average, which also coincided with the fib extension of 0.618. But if we look at the Russell here and see potential pullback, the ones I would look toward is the 50 retracement, and that would be the 50-day moving average, which is starting to slope down now. So any break below this rising wedge here would mean we would either test the 50-day retracement or the Fibonacci golden ratio of 0.618. Now any break below the Fibonacci of 0.618, then we could possibly see the lows here mid-October. Okay, let's also take a look at what's happening in the crypto space. Now this is an interesting one because this is ETH versus Bitcoin, and as we can see here previously, we have fell below this rising wedge here, and then ETH started to gain momentum here to the upside, but then it failed again, and so now we're finding support here at the 200-day moving average. And so this is looking so bearish for Ethereum compared to Bitcoin. Now if we take a look at this chart here, I mean, this is just spelling disaster for Ethereum versus Bitcoin, right? So I mean, this is a bearish channel here, and if we look at this thing on a monthly, it even confirms it even stronger. So if Ethereum is going to fall from these levels, at this point we're seeing a lot of demand, especially here. So big sell-off from these levels would not be, you know, immediate. So this will be a heavy support line for Ethereum to defend. If not, this is going to be the catalyst for something to happen for ETH, and then we could possibly see a breakdown below this channel here, because this is looking pretty tight here. So ETH defended this trend line here back in the first quarter of 2020, and then it rallied, outperformed Bitcoin, tried to move even higher, but then collapse against Bitcoin. And so maybe this could be the last line of support for Ethereum. I'm just looking at the charts here. I don't have any bias towards one or the other, but I'm just saying if this thing's gonna fall apart, Bitcoin is going to be the winner. That was it for today's video. Thank you so much for watching. I'll see you guys in the next video, and if you haven't already, consider subscribing, hit that like button, and take care for now. Goodbye.